All right, right here, we're taking a look at a 150-day chart of S&P 500. $ SPX is that ticker. We've had a nice little rally here, and so we wanted to talk about where do we stand moving forward. You can see back from February to April, the market put in a bullish inverse head and shoulders pattern here. You got the left shoulder here, the head down here around 1250, and the right shoulder over here. And we had the neckline, this neckline area, which is this little channel here I'm pointing out, is very significant because it is it's the area between 1294 and 1305 is exactly where that neckline is. And as you can see, it acted as support you know, here back in February, again in March, again here in late March, and then again in mid-April. And you can see what happened when in June, as we entered June, the market was not able to hold this key support. You can see we came back and tested right around the March lows, but we've now been able to bounce, and we're working on a nice little 4-day rally here, which is good to see. So what we're going to be watching on the way back up is this neckline area, okay? You know, it acted as support, you know, from February onward to May. And you can see today we're starting to break back into that channel. And we want to see how is the market going to respond once it gets back above this previous area of support. Basically, what we're watching for is simply, is 1294 to 1305 now going to act as resistance on the way back up for this market? If it does, we believe that we will eventually retest these March lows and likely break through them, and in which case the next area really wouldn't be till about 1220-ish. But let's focus on what we'll be watching. You can see now we've got a nice little trend going here off these June lows here from last week. So we want to see just, you know, we're talking right around the 1280 level it'll be tomorrow. And so on pullbacks tomorrow and the rest of the week, if the market pulls back, we'd prefer to see this trend line hold, you know, around that 1280, 1285 level. It's going to keep increasing. So watch for that trend line to hold, okay? And if it does, if we do come back to it and bounce off of it, that could be a nice bullish sign. Furthermore, what we see here is you can see we had a pretty clearly defined downward channel, you know, from the May high throughout the rest of the month of May. We put in a little head fake here, but it gave back all of its gains. And then, you know, in this month we actually fell out of that channel. But now with today's candle, we've moved back into this channel, which is a bearish channel. I mean, don't get me wrong, this is a clear downtrending channel. But what we want to watch for is, can we break out of this downward channel? And if we do break out, is it going to be followed with a move like this, right back down into it? Or is it going to be sustainable, and are we going to push through back up to 1320, 1325 and be on our way? You know, the good thing about this is the way our trend lines are forming, if you look right here, the two trend lines meet, which is going to be late June, you know, that which is coming up next week. So we should get our answer pretty soon to what's going to happen for the market. I would imagine by the end of next week, we will have either broken out and, you know, have been able to confirm that, you know, we did indeed put in a bottom here, or I think we will see a retrace. I don't think we're going to get much in between consolidation going on here. Maybe I'm wrong. I don't know. But I just think the technicals are such that we're going to see a move in one direction or the other, pretty clearly defined, within the next 3 to 8 trading days. And so, you know, furthermore, if we do indeed break out above this 1305 resistance channel, you know, our next level we're going to be watching is 1320. You know, there should definitely be some trapped buyers up there. Another thing to keep in mind while we're rallying here, pay attention to what the talking heads on the media are saying and what the headlines are saying. Are they remaining bearish? Because if we keep rallying here and the quote-unquote experts, you know, keep telling everybody that, oh, sell this rally, fade this rally, and, you know, use this as an opportunity to exit positions, then I'll take that as a bullish sign. There's nothing better for the market than climbing the wall of worry and being able to rally without people jumping on the bandwagon. Now, the other side of that is if we keep rallying here and people are talking like I'm talking now and saying that we might have had a bottom put in, that's going to be a bearish sign. I don't want the media to catch on to this move that might be happening. We'd prefer to be in the minority when we think that we maybe have put in a bottom. But right now, it's just too hard to tell. The bottom line is we've had a nice 4-day rally here off of a key support level above 1250, but yet we still remain below some critical resistance levels. So you just kind of want to trade with caution and respect the levels that we've talked about here. You know, 1305, respect that level. If the market comes up to 1305 and then breaks back down below 1300, we would take that as a particularly bearish sign. So, you know, right now though, like I said, we've got this trend line. So if the market does pull back tomorrow or Thursday or Friday, keep an eye on this 1280, 1285, where this trend line is starting to slope up. And if we hold that, you know, you got to stay bullish in the short term. We'll see how this develops. So key levels to watch: 1294 to 1305 S&P 500, 1320 on the S&P 500. Those are our resistance that we're keeping an eye on overhead. Support levels: 1280, 1285 on the S&P 500. Below that, I'm bearish, guys. If we break back below 1280, I think we're heading back to 1250 and possibly all the way down to 1220. So it's pretty clear cut right here. Hopefully this helps you out with some of your trading. Take care.